What's up guys, welcome to Oz Wealth and welcome to another video. We haven't been posting a lot lately due to some life crises, but we're back on the track, we're back to our schedule. And since we have more time right now, or actually plenty of time right now, we are going to have like a faster speed, and the progression for now is to post a video a day. Finger crossed, we'll see how things are gonna go, but we're back to document our journey to financial freedom. We're back to track the market and documenting the entire progression toward retire early. Not familiar with it, is financial freedom and financial independence and retire early. So welcome back to Oz Wealth. Welcome to our viewers and our subs, and we're back here, and let's jump into it without any further ado. Let's go ahead and talk about the market today. As you see here, Dow Jones today ended the day positive 44.44 points. S&P 500 also ended the day positive, gaining just only 5 points. The Nasdaq lost 32 points. The Russell was the biggest loser, 36.51 points. As you see here, the sectors here, consumer staples was on the top of the list, 0.92%, followed by utilities, information technology, communication services, healthcare. Real estates are flat, and the biggest losers, industrials, consumer discretionary materials, financials, and energy is the biggest losers, ExxonMobil and Chevron. As for the S&P 500, as you see here, the gain today was very minor, and it's all counted to Apple and Microsoft. If you watch today, Apple scored today all-time high, and Microsoft also scored all-time high. Despite the turmoil the market was going through, especially yesterday, we had a big sell-off. It's so impressive to see the S&P 500. It's still rising and still scoring all-time high. As for my Robinhood portfolio, let's jump to it really quick. The progress for today, we kind of ended the day flat with a loss of 0.20%. As for the week, we are up 3.50%. As for months, we're up almost like 5%. As for 3 months, we're up 1.36%. As for the year, this collection of stocks that we picked here in Oz Wealth is making us almost 24% of a gain, and for overall it's almost like 30% since we started August 2019. I'm looking at this number right now, and we're standing at 90,772 as of today. And the gain for the entire year compared to like an S&P 500, which is like the average return is 8 to 10%. We're scoring here 23-24% since last year, and I understand like last year was like a special year, but I think our choice of picking those individual stocks was very successful, and we're very proud here in Oz Wealth of what we're doing. And I think our own ETF is doing really good, and we are pretty happy with the results. I mean, 24%, like where can you get this? Instead of rambling a lot around the 24% that we scored here, and we're gonna jump right away to the overall portfolios and share with you the progression our entire portfolio made in the last few weeks. So let's jump right there. As for the Robinhood portfolio, as I mentioned earlier, we're standing at $90,772.36. Starting with Tesla, we own 50 shares of Tesla today. Tesla didn't do well, lost almost 2%, a little more of a 2% at $654.85. I think we broke the supporting point at Tesla. If you see if you're watching Tesla closely, and if you see the supporting point, I think we broke it. And Tesla is not showing good signs so far as the week continues with big earnings, especially banks, and we're coming out of bigger sell-off yesterday. So we're gonna keep a close eye to Tesla, but 654, our cost average is still way below as far as I remember. As you see here, we're at 517.13 cents, so we're pretty good right here with Tesla. But we're gonna keep the close eyes on Tesla and see how the stock's gonna behave. So far, we are a big believer of Tesla here, and I personally a big fan of Elon Musk, and I think this is a stock for the next at least 10 years. But who knows? Like if Tesla is gonna keep drowning, maybe we will consider positioning in the entire portfolio. But right now, as you see here, the acquisition of Tesla in our portfolio here is $32,742 with $517 the average cost. Let's jump to the next stock in our portfolio, which is Apple, which scored today all-time high. Today Apple is at $149.51. We own Apple and we own 120 shares, and the average cost is 118. It's almost like 18,000 the acquisition of Apple in my portfolio. And as I mentioned earlier, like as you see the graph, Apple like last 5 years is 518%. Last year 51%, pretty impressive. So if you own Apple by itself, you beat the S&P 500. So this stock, I'm also big believer in Apple, and we're gonna own this stock for life. Followed by Visa, we own 20 shares. Visa also continue rising, 1.5% of a gain at $245.99. We bought Visa at 231, so we're almost like $15 of a gain right away in like almost less than 2 weeks. So Visa also one of those high tech with a very impressive performance. If you look at last year, it's 26% of a gain, and if you look at 5 years, it's just straight up like 220% up. So we're a big believer of Visa, of course. And followed by SPHD, the dividend ETF, which includes the 50 companies in the S&P 500 lowest volatilities, highest paying dividend. And SPHD ended today with a gain almost of 0.5% at $44. Followed by Realty Income, the REIT stock. We own 200 shares, a little of a gain, a little above 0.5% at $68.91. Stag ended the day gain of almost 0.5% at almost $40. AGNC lost 1.16%. Main Street Capital lost 0.5%. Johnson & Johnson almost flat. Bank of America, big sell off for Bank of America and banks in general, almost 2.68%. American Express flat. Caterpillar lost 1.5%. Coca-Cola gain of 2.5%. Philip Morris at $100 hovering for a while, again almost 2%. Pembina 50%. The oil company, the only energy stock we own here, scored a loss, as the energy sector in general scored today a huge loss. And the WPC carry, we own also WPC REIT stock at $78.90 today. It's pretty impressive for WP carry. And I think this is the last stock we have for our portfolio, as the other 3 stocks we just gained them due to one of those new subscribers clicking in our Robinhood links, and they gain free shares, we gain free shares. So lately we gain 3 more shares here. We're not being able to sell them right away until they settle, so it takes like 3 to 4 days. I personally don't know any of those stocks, and I probably will sell them and reposition the money for high convicting stocks that we really own here, or maybe open new position. We are thinking of SCHD, one of those ETF from Schwab. I'm not sure if any of our familiar with it, and we own SCHB, but SCHD, which is Schwab US Dividend Equity ETF. This is like the top dividend stocks in the S&P 500, and if you look at the projection and the performance of this ETF, it was very impressive, and we're thinking to open a position for this ETF very soon. This is a quarterly paying ETF, and that will give us like more exposure to other areas that we do not cover in our collection of stocks right here. So the eyes are on Schwab dividend equity ETF, but we'll see how the market's gonna go this week, and based on that we're gonna relocate our portfolio according to all the circumstances that this week is gonna go through. As for the overall investing portfolio that we own here at Oz Wealth, we are standing right now at $114,890. The overall general portfolio lost almost 0.1% today, And as you see here, this portfolio is a sum up of 4 individual portfolio: the HSA, the Robinhood that we just shared with you just briefly, the Roth IRA, and we opened SEP IRA recently, and we are investing solely for SCHB, which is equivalent to the VTI, the Vanguard Total Stock Market Index funds, but we are investing with the Charles Schwab version of it, which is the SCHB. As you see here, this ETF owns or covers almost 2,600 company. It's kind of blend of large cap, small cap, and mid cap, and some international exposure as well. We are a big fan of this fund, and this fund is going to be owned for life. So for SEP IRA, we own 5 shares, as you see here, for SCHB, as we own almost like 40 shares, I think, for the same ETF, at the HSA. So, and this probably around like 40 right now, because we've been owning those 39 shares for a while, and the cost average for the SCHB and the HSA is $89.75. Today, the value of this ETF is $105.32. Impressive progressions, unbelievable. We're gonna go through it really quick, but again, it's 4 different individual portfolios, and as you see here, the for today we're down like 0.1%. The annual income we're going to receive from the entire portfolio is almost like $2,000 a year passive income, and dividend yield is going to be 1.69. Yield on cost almost 2.10%. The beta is 1.45. I'm not happy with the beta, as Tesla, as you see here, is almost like 30% of the portfolio, and that's what makes the beta is so high, which shows that this entire portfolio, or our investing strategy, is kind of going to the a little to the aggressive mode, and it's a little more of a volatile technique. But as we have a lot of years ahead of us and we want to go aggressive for the first at least 10 years, we don't mind to have beta at 1.45%. But as we progress through the journey, I think this number should go under 1. But for now, as Tesla is 30% of our portfolio, that totally justifies why beta is 1.45. As for the income we're gonna receive in the coming days, tomorrow, or actually today, July 15, we're gonna be receiving almost $100 passive income from, let me see here, from 5 companies are gonna pay us tomorrow. 5 checks coming in the way, just doing nothing, starting with WP Carey is gonna send us $21, Stag's gonna send us $6, Pembina is gonna send us $8.52, Main Street Capital $10.25, and Realty Income, the monthly dividend REIT, is going to send us $47.10. We're gonna receive this actually every month. The others are, actually Stag every month, Pembina every month, and Main Street Capital every month, except WP Carey, they pay quarterly. Back to the portfolio, if we go to the diversification and show you the percentage of the consumer discretionary, actually Tesla is almost 40%. I was mistaken, I thought it's like 30. Followed by information technology from Apple and Visa. I think, yes, we are almost 27%. Realty Income and WP Carey is 20% of our portfolio. Financial 7%, consumer staples 4%, energy 2%, industrials Caterpillar with a very impressive rise so far. 1%. Healthcare, we need to work on healthcare. I'm thinking Johnson & Johnson maybe open a new position for Pfizer, since Pfizer is still in a good discount. And we exited utility and communication. We sold AT&T stocks. We sold Con Edison, and we never own any materials. But the justification for this is just there's no growth. You feel like those utility stocks are just so static, like stagnated where they are. They pay very nice dividends, but we're not happy with the growth. We would like to own a growth stocks here that pay dividends, like growth, quality, and value stocks that they pay dividends. So we don't mind lower dividend yield as long as the growth is going to continue to go up, from Apple to Visa to Tesla. Tesla actually is the only stocks that we own that doesn't pay dividend. But if you look at the entire portfolio, the entire portfolio pays dividend except Tesla. We are thinking waste management maybe will cover or fill the spots of Con Edison. I'm not sure. And communication services, we're thinking of Verizon. Verizon is really taking the lead when it comes to communication and beating the AT&T and the entire communication sector with a very impressive growth and very impressive dividend yield. So we're going to keep the eye on those two stocks in the next coming weeks and see how the market is going to behave. And based on that, we are going to make our move. As for the income we receive from dividends, realty income is the top of the list. 30%, almost 30% of our income from dividends comes from realty income as they continue to pay us monthly. I think it's like around $50. SPHD, the dividend ETF, the 50 stocks, lowest volatility, highest dividend yield. We received 8.2% of our dividends from SPHD. AJNC's next. The S&P 500 index fund from Schwab comes fourth, and Main Street Capital 6.3, Apple 5.4, Pembina 5.2, Schwab Total Stock Market Index Funds 4.4, WP Carey 4.3, and Coca-Cola 4.3. And that's it, guys, for this week. If you have not signed up for Robinhood yet, links are in the description below. You can get a free stock from Robinhood. It's a win-win deal. And if you have not smashed the like button, please do so. You can kick it, hit it, smack it, do something to it. It will mean a lot to me. And if you like the content of this channel in general, please consider subscribing and hit the notification bell. And until next time, you guys